Hey, good morning, JC.
Hey, Kay, how's it going?
Good, man. Just getting started right here. Let's see. Yeah. Not sure if you're following cryptocurrencies, but yeah, no positions for me right now for this one. Let's see. Anything new going on with you? Any, curious to know your take on the SPY or how you're watching it.
Well, not much. Yeah, just watching the weekly as always to see if that histogram starts stepping lower or not.
Yeah.
That's key.
I think so far it's looking okay. I mean, it's still a little choppy, but at least it's still above the 100 MA for me.
Right.
Yeah. Still hanging above the 20 MA right there for the weekly. So the way I kind of trade is, as long as let's say this is so your bullish indicator is above the 20 MA. So if I were to use that, as long as it's above it and the longer it hangs out, the better I'll interpret it as. So it looks like this volatility wants to go away. Going to VIX Central. Yeah, it's looking good right here, 4%. I'd like it to be higher, 10% would be great. Do you sort of understand this at this point, JC? Like how I'm kind of utilizing this?
Yeah, I know what your the concept is, but I'm more on the VIX. I'm more like I look at also like the technical indicators.
Yeah.
Like I treat it like a stock, because it's the same kind of thing. I know that you try not to use it, using MACD and all of it on the VIX. But
Yeah.
I've been doing it for a long time, and it's pretty useful.
Yeah. Okay. Yeah, I mean, I'm just looking at these indicators over and over and over. So I'm just like kind of waiting for maybe one person to come in. I know it's like Memorial Day weekend. People are probably going shopping and doing stuff. Let's see. So we'll just analyze what's going on real quick. So have you been looking at any individual securities? Any picks? This one I got hit this week on earnings. I decided to hold some on earnings. So I'm not going to try and add anymore. I might revisit or let it go down and maybe revisit this at 105 or at like a 100-day moving average right here. But I still like this company. I still think this one's bullish, but the recent earnings is very bearish. So short-term bear, but long-term bull on this one. Let's see. Yeah, Bitcoin's just like going down again. It's pretty cool. I mean, well, it's not cool if you get hit, but yeah, I'm liking the price action because I want to get back in again, right? You got a breakdown right there, right at the 8,000 mark. What else you got? Several, breakdowns right here and resistance. Well, broke down, retest, failed, and then broke down some more, and then just going down. It looks like it wants to revisit. Well, it's already almost at 7K, but yeah, revisit to 7K for Bitcoin. Ethereum, USD. This one's breaking down. I'm staying away right there, right? A close below that line right there to me. I consider that bearish, so I'll stay away. If you think about it, it's also setting up a little flag right here, a little pattern. Again, I'm staying away from that. And then you got the head and shoulder, head and shoulders right here. Nothing too exciting right there. So staying away still. I'd rather protect my money than let it get locked up. Let's look at the coin market cap. Sorry, we're reviewing cryptocurrencies first. Hey, JC, you could hear me, right? Just want to check. I know it's been quiet for like a minute.
Yeah.
Okay.
Yeah, I could hear you.
Okay, awesome.
Yeah, I could hear you.
Yeah. So I'm still analyzing this market segment just because I really want to know if it's going to play through or not. But as of late, once more, things are breaking down, declining. So again, this is the total market cap of cryptocurrencies. Just want to zoom in the most recent price action. If I can get it load. Oh, there we go. Right there. So if I perform technical analysis on this, it's setting up right here. Looks like it wants to go lower. So maybe going lower to the next test at 300 billion. That's where I'd be looking at next. But in the meantime, just staying away from this. That's it. Let's look at the indices. Bitcoin daily. Let's see what you got.
Oh,
Yeah, I know it's looking pretty bad.
nothing good ever happens when it's below the 50 and the 200.
Yeah, agreed. Let's see. Hey Sylvia, can you hear us? I know you're online, but I'm not sure if you can hear us. Ang, welcome.
Yes, I can.
Okay, all right. Nice to hear your voice. I haven't seen you for a while. I think the last time we saw each other was at Raj's going away lunch.
Oh yeah.
Yeah. Okay, well let's look around the world, and I'll anticipate whoever comes in. But let's look at the indices. This week, nothing too exciting, I guess. Start of the week it kind of dipped, but then rest of the week it kind of recover and then just consolidate sideways. So if you want to look at it the quick way like I do, I just pull up the indices right here and just start charting and seeing like, where are we going. So to me it's just, we're still stuck in this pattern right here. Nothing much. I like things to go higher. Oop. All right, you get the NASDAQ consolidating right here. Consolidating higher, which is good. We already have the Russell, again, we talked about last week. It broke out right here, and it's going higher. So that's looking good for this one. Again, that's small cap. Nikkei, a little breakdown, but I think it rallied quite a bit. So give it some room. I think it might recover. Same thing with this one. Similar, as you can see, with this one, as well as this one. So breakdown. So it's looking a little scary on the international side. But in the US side, it's looking okay. Not bad. I prefer this rather than us hanging out at the 200-day moving average and maybe breaking down to the 200-day. That would look kind of scary. But even if it breaks, it doesn't mean to me that we're going to go down. I need to see very serious price levels break down. VIX, we broke down from the 15, was it? I don't have the 15 right here, but it's in between. And we're still below at 14, so that's looking good. With the volatility futures in positive contango. Right, the first chunk at 4.4%. This is the first chunk right here, or the first 30 days, and then going out to the 60 days. Still in positive territory, so that's looking okay. I like it to be double digit. That could be even better. Let's pull up SPY, detailed analysis of SPY. Actually, let's pull up SPY. Daily, so this is what it looks like. Maybe kind of small. So again, triple test off 200-day moving average, now holding the 100-day very strong. I like that. Again, this is my 100-day SMA right there. Holding it really well. Above the prior resistance right here at 270. So I'm just going to keep watching and see where this one goes next. Detailed analysis on QQQ. Similar, above 165, holding higher, but this one's above, well, above the 20-day moving average. Is SPY above 20-day? Yeah, it's also above. So they're both looking good. I mean, they kind of travel the same way. So same thing with Dow Jones. This one will look better if it's above the 100-day moving average, kind of creeping below. But Russell 2000, IWM, looks good. So this is interesting. And it's consolidating higher. So to me, 160 holds and higher it goes. Going back to this, looking at bonds. I saw a rally in bonds. All right, if we're going to say interest rates are going down, lowering interest rates, rising interest rates means bonds going down. But this week we saw, a big green candle on the bonds. Maybe a little rest after a decline, but let's continue to monitor this. And then recalling in 2 days, the new gold report in Gold We Trust is going to be released. So I'm excited to get my hands on that in Gold We Trust. So about 1.5 years ago, I read this. Well, actually, no, not 1.5 years ago. 1 year ago, we read this report. So in 2 days, the report's going to come out, if I recall correctly. Let's see. In Gold We Trust. One in English. 1 day, 14 hours. All right. So you guys could download the report too and check it out. Hey Liz, morning. So I'm looking forward to this. So after I get this report, we'll do another session on gold, and then maybe eventually a session on inflation and deflation for JC. I don't know what I would pair that up with. Maybe with like commodities, like oil. We'll talk about oil too. We had an oil rally and then oil pullback as the most recent. Where is it? Energy. So check this out. Look at that. Alright, so if you were trading this and you're on the long side, if you wanted to trade the trend, that's one, right? This would be like a stop out, or you can use 70 as like a stop as well. But I am seeing gas prices going up. I could still feel it even though I drive a Prius, I'll tell you that. But that's the story on energy right there, as the most recent, right? Bonds we looked at just now, softs. Really, I don't really look at this, but look, oranges. I do like to point out technical patterns, right? OJ is setting up right here, very bullish chart. I figure that if I show you guys enough of these type of patterns, you'll get used to it, and you could apply it to any asset class that you trade or invest in. So sugar, a little reversal right here, but this is my favorite right here, these type of patterns, where it's like rallying and then setting up higher, tells me it wants to go higher. Cotton breaking out a little bit higher. Let's pull up the weekly, so see what it looks like. So cotton looks bullish to me. This one looks very bullish. If we could break, it looks like it's hitting its head on resistance right here, but if we could break out, that looks good. Lumber, nice weekly uptrend. Sugar, a little reversal, so maybe like a bounce trade, but clear breakdown at 14. Coffee, way too choppy for me to want to look at. Cocoa, well, looks like it's breaking down. Retest of this prior resistance. That's pretty much it. So metals. Now we had that dollar rally, and that really hurt gold. If you look at the dollar rally, it rallied a lot. Looking at the weekly, right? Pattern fail, and then went the other direction. We talked about this. This is a huge rally in the dollar. So it held 90, and then went like $4. So keep in mind, a movement in the dollar is a huge economic impact. At least the last time we analyzed this market segment. So that's the dollar right now, continuing to rally. Right? If it rallies, that means financial tightening, along with rising interest rates. But bonds are rallying right now, so interest rates are, I think it's just taking a break. So we'll circle back on this one. But that's metals. Grains, let's look at corn. We talked about corn. So corn broke out, continues to break out. We're on the weeklies, pull back the daily. Setting up, retrace. Where were we analyzing this, if I recall? We pulled the corn ETF. It's been kind of choppy, but we got to break out. It's going higher. So I like that. I know the people on Real Vision like this. Though I'll say again, I didn't capitalize on this, guys. I'm just watching it. I'm more of a stock trader at this point, or investor. So that's pretty much all I have to say for that. Let's see, going back to the futures. Okay, so that was our around the world analysis, quick analysis, at least once a week, right? Nothing too exciting this week in SPY, just consolidation. So today I want to talk about, you guys know who SoftBank is? Oops. Anyone? SoftBank? Have you guys heard of SoftBank? Masayoshi Son? Owen? Okay. Okay. Oh, hey, Steve. I didn't even know you were online. Oh, whoa. Okay. Hey, welcome, guys. I didn't know you guys were all online. Yeah. So SoftBank. He's the guy that owns Sprint. Yeah, exactly. Okay, so today's technical discussion number 72. Before I jump into the digital conglomerate, talking about SoftBank, I was thinking we'd do a quick review of fundamental analysis and technical analysis. Just because when we're analyzing SoftBank today, I'm going to jump into a lot of the fundamental analysis or the investor reports on the investor relations page. And so I might kind of go, I might go a little bit quick, or because I know not everyone is good at fundamental analysis here. So I just want to make sure I'm not going too fast, and I came up with some frameworks that you guys could really leverage, and we'll talk about SoftBank. So before going into SoftBank, let's do a quick review of what fundamental analysis is, right? So you guys know me, I jump into stocks, just pull up Apple, and I just look at the numbers right away, on top of looking at the charts, right? Like you could tell, setting up a bullish pattern right here for Apple. Apple wants to go higher. But you also see me jumping down here and looking at the market cap, the size of the company, and then all the ratios and stuff. And I kind of flipped through it pretty quick. And I think a foundational understanding that could really help you guys know is that you have to understand that there are three main financial statements out there, right? The income statement, the balance sheet, and the cash flow statement, right? And everything that we look at over here are multiples of all this. So for example, if we look at the price to earnings ratio, it's a 17 multiple on the income statement, right? We're buying a stock, we're buying Apple at 17 times its salary or income statement, or in other words, its salary, if you were to think of it as a person, an individual. And then when we go down to like price of sales, again, that's salary as well. But this is like sales versus earnings, right? So the difference is you sell something for $100, and then what did you take out of that? That's your earnings. And then going down to the price to B, or price to book ratio, that's really a multiple on the balance sheet, right? Does that kind of make sense? We're buying a stock at 7 times its balance sheet. So to give you like a simple way of thinking about this, just think of the income statement as like your salary, like how much you make. Let's say you make 100K a year, right? So that's your salary, and then whatever you expense each year, let's say you spend 20K, that's your expense, and that's really the income statement. As for the balance sheet, we're talking about, okay, you make 100K a year, you expense 20K, what do you do with that 80K? You go stash it in your bank or closet or whatever, right? And so over time you'll stash it and you'll get like a net asset, but then at the same time you also borrow money, so you'll have a liability. So what the balance sheet really is just a net of those two between assets and liabilities. So that's what we analyze. So when we're looking for great investments, we not only want to see a growing sales, but also a growing earnings, right? Now that's just the analysis of the income statement. We also want to see the growth of the balance sheet, or the reduction of the liabilities on the balance sheet. Basically what you owe, right? We want to see that you're paying down your mortgage, to see that your balance sheet is becoming like more investor grade, we would call it. So, and then this cash flow statement is just basically showing how cash is moving around the company. You don't have to pay attention to this now, but when we do analysis, just for like a quick recap, or or catching up to speed, it helps to know these two, right? And so I started thinking about some frameworks that could really help you guys in understanding how to analyze this like I do really quick. And I just thought it was really interesting, so I wanted to share it. So it'll look something like this. So going back to the 3 statements that you need to know, right? Income statement, the balance sheet, right? And we'll forget about the cash flow statement for now. But what I want to teach you guys is just really like this, applying economic charts to really understand it like right away. So what we're really doing when we're looking at sales is we want to know, okay, is sales going up for this company? If it is, then how about expenses? Are expenses sideways, right? And so you might kind of know that the difference between here equals the margin. Does that kind of make sense? So we'll stay on the topic of the income statement, and we'll draw a few more charts. So sometimes I might analyze a company where sales are just like this, right? And then expenses start to go up. Okay, maybe let's not do that for now. Let's say sales are constant, but expenses going down, right? So your margin, again, is improving. Higher margin. Does that kind of make sense? Applying like these type of chart thinking to just really assess the investment fundamentals really fast. Because, I mean, I could show you the statements, right? And it might be too quick, or I mean, for a new person, it might be really slow for you to analyze like the balance sheet, right? So what we have here is the income statement, and I'll just be like, okay, scrolling down, looking at it, okay, net income is this, right? But really what I'm looking at is, you know, we have sales right here, right? So right here we have sales, and really what I'm just looking is the gross income, seeing if sales went up or down. So basically, did sales go up, right? Or did it go sideways? Or did it go down, right? And at the same time, after I'm done looking at sales for the income statement, I'll flip over to the expense side and see, did expense go sideways, right? With an increase in sales, that means, you know, that's the difference right there. So I know that was kind of messy. Let's redraw that. So the ultimate scenario for me is what I'm looking for is sales are going up and expenses going down. Why is this the ultimate scenario? Because the difference in between means the margin is fattening. If the margin's fattening, then the company's making more money. Now keep in mind, this is just income statement talk. What if we move over to the balance sheet, okay? But one last example. So if sales are going up, let's just say you start earning 200K, right? And your expenses go down, you become more frugal. Then you take home more, and your margin's bigger, so you deposit into your balance sheet. So now let's go over to the balance sheet. Right? Now, balance sheet's the same thing. What are we doing? I'm looking to see if assets are going up, and if liabilities are getting paid down, right? Or if liabilities are just constant. As long as assets are going up, then I know there's growth in the balance sheet. But if, like, you know, in some scenarios you might get something like this, where both assets and liabilities are going up. And so you might have a balance sheet that remains constant. Hey, SK. We're just talking about some quick, we're just doing a quick review on fundamental analysis, and I'm showing them charts on how to analyze income statements really quick. Just to get a quick feedback, were you guys able to follow what I just said, or was this a little complex in thinking? Because in my head, I'm thinking this might be easier to think about in your head when analyzing numbers versus like looking at the numbers. Any comments? Okay. Yeah, it makes sense. Okay, awesome. So that's really all I'm doing, guys. And
Hey, Kate.
Yeah.
Kate, I had a question for you.
Yeah.
Yeah, I was going to ask you, is the income statement and balance sheet, is it fairly easy to consolidate two companies and try to figure out how it's going to affect, like, for example, the merger of Sprint and T-Mobile? if you have two sets of data and trying to combine both of them into one, if it's going to make sense or not, the deal.
I'm sorry, it was kind of hard to hear you. Did you say like if a company has like multiple
Like Sprint and
businesses?
T-Mobile are combining.
Hey, you think you could type that? I can't really hear you, man. I'm just showing you like if I were to start.
Yeah, I was
all
talking
over,
about.
Say again.
Yeah, I was talking about like Sprint and T-Mobile are combining companies, so they're buying one and buying the other. Is it easy to figure out like how that's going to affect the income and the balance sheet from both companies combined?
Exactly, exactly. And so this review today, it will help us in our analysis of SoftBank, right? Because it's a conglomerate, meaning it's a portfolio company that is tied to many different businesses that have different market opportunities, right? So it owns Sprint, which is like a telecom play. It owns a little bit of Alibaba, which is an e-commerce play. But how do you, from a financial analyst point of view, how do you analyze all that? You have to actually net out all the gross margins, which is kind of interesting, right? So let's say you own Sprint and then Alibaba, right? And each of them have their own income statement and balance sheet. So what they really do is they just net it out. Right, so whatever the income statement is, you just net it out, combine it into one income statement. So that's why they call it consolidated financial statements. But that's another topic. I just wanted to make sure we get the fundamentals down, because it's a lot easier than a lot of people think. And I think once you understand the frameworks, it just becomes really, really quick to analyze, in my opinion. Right? So that's what we're doing here. We're looking at sales. Did sales go up? Did sales go sideways? Or did sales go down? Something like this. Right? Same thing with EPS. Is EPS going up, sideways, or down? EPS, if you were to change it and make it similar to this, okay, or if you were to change sales and make it similar to EPS, because this is earnings per share. So you take this, which is the earnings, divided by shares outstanding, and that equals your EPS, right? But what you could further do on this side to make it similar to the EPS is you take the sales and divide it by shares outstanding, and then you'll get sales per share, or SPS. You see what I mean? So I just wanted to do that quick reminder on fundamental analysis and help you guys understand.
No, Apple is not even categorized as a semiconductor software company, but like consumer goods company.
Yeah, because we're consuming the hardware. So after you get the fundamentals out of the way, right? You understand the earnings, the sales, the earnings, and then the expenses. And then you get your net. That's the income statement. After you understand the balance sheet, all the assets minus the liabilities, is it growing? That's really the core of fundamental analysis. The other type of analysis that we do is we start to look at okay, what sector is it in? Great, it's in the consumer goods sector. And then we analyze what industry is in, electronic equipment. And then we could further filter and see who are the competitors, what is the market multiple on the sector, what is the market multiple on the electronic equipment industry. So that's what we're really doing. And so when we're investing, we're determining, okay, am I willing to buy a multiple of their salary of 17? So let's say you make 100K. Let's say you as an individual are a stock and you make 100K. And I'm going to buy your stock, but your stock is trading at 17 times what you earn, right? Let's say you net 100K, so I'm going to pay 17 multiple of that, right? It's like, do I want to do that or not? It depends. What is the market currently paying? And so that's why we jump over to the SPY index and see what's the multiple on that.
With respect to 17, it doesn't look very expensive.
Yeah, 17 is considered cheap. It's cheap for this company, this market segment, right? Because you got average PE ratios of like 25, 30. Yeah, so I was analyzing Digital Realty, the REIT this week. Sorry guys,
Just a quick question on the previous one. The target price that is listed, is it from Finviz? Lately I started observing it. I don't know if it was there earlier. Like if you go to Finviz side.
Yeah, the target price.
Like right on the right hand side. Left. Yeah, this one. So I don't know if there was earlier or it has been lately started added.
Yeah.
But it's like an analysis price aggregate, or is it average of that, or is it like FinViz's own calculation?
Sorry, Sue, I'm just gonna mute you, all right? Just chime in, because I just hear some noise. Your question again, what was it?
This is coming from more like
An analyst point of view.
is it an average of other analysts, or is it FinViz's own?
So I don't like to rely on analysts, because I like to be my own analyst, so this is one thing I don't look at.
I only lately started observing this. I don't know if I was there from always.
Yeah.
But
So to tell you the entire beauty of like why I analyze this, right? The multiple of the income statement or the multiple of the balance sheet. The more you analyze this, you could start jumping into the world of like business broker. Sorry, not business broker, but like buying out your own little company, right? So I get emails from this business broker every now and then, sharing what new listings that he has. He's like a real estate agent, basically. And you could apply this in the same type of multiples in this world. So let me see if I could pull up. Well, why is it not working? Let's pull up this listing. So, wow, his website's not working. Waiting for FE International. Okay, well, while it's loading, I just want to point out, so look, revenue, this is sales, right? But let's ignore this real quick. This person wants to sell their business, which is an e-commerce pet fashion accessories. Yearly profit, they make 300K. And he wants to sell it for about a multiple of 2. What do you guys think of that? A PE of 2. That's pretty awesome for SMB level, right? Let me give you a little recap on the market segment pyramid, right? At General Electric, I sell at the enterprise level. So I source for enterprise deals. So these deals are at least 100K and up, right? And then I also do middle market. Middle market is like 50 million revenue, if I recall. And then what we just analyzed right here is SMB. Though I would argue it's like upper up here, like upper SMB, right? That this business that we just analyzed. So it got sold for a PE multiple of 2. So when we're looking at the enterprise level, like the Apple, the Facebook, all those big companies, we're seeing the SPY multiple of like 25, let's say. I think it's a little bit higher now, like 28 or whatever, right? Same thing with here. If we look at if we dissect one of the segments in the enterprise and look at just tech, the multiple is like almost 50. And you pull that up on FinViz, right? Let me just show you real quick and we'll jump back to what I was saying. I don't want to digress too much, but you could go to groups and you could look at sector and valuation, right? So you got the sector, technology, the average multiple of PE is about 25. So that would be higher, right? So that's what you could do. And you could do even further into industry, right? So since I like to trade application software, okay, I don't know if it got cut off, but since I like to trade application software, the multiple is about 44. There's a reason why it's 44. It's a lucrative market segment because we talked about enterprise software last week. But now going back to how I teach you guys to analyze in the public markets, like the enterprises and stuff, you could do the same type of market multiple analysis here. So look, all you gotta do is analyze, okay, it's e-commerce, what type of business model, digital business model. It's gross, this is the monthly, but we're looking at the annual, right? So this guy wants to sell it for 700K, net profit of 300K, so a multiple about 2, I'd buy that, right? I wanted to show you the companies that they're listed, and I want to show you that some multiples are like 3, and you're like, no, that's a rip-off, I don't want to buy it. Because everyone else is trading at about 2 to 3 multiple. I'm sorry, let's say they have a listing that's like a 4 multiple, but I can't get the website to load for some reason. Let's try another one, bizbuysell.com or Empire Flippers. So let's check out their marketplace. So just like how we look at stocks, right? I jump into the marketplace and we look at stocks in the public company. Keep in mind the difference here when I'm looking at a small business, of course we're looking at SMB, so we're down here. We're looking at this market segment, and in the stock market, let's just say you're looking at Apple right here. We're just buying like a portion of the shares. Like you might want to accumulate like 1% of the shares. All right, this is stock market. But in the business, well, in this level, because it's smaller in nature, we could buy out the entire company. So I want to show you, just to get your feet a little wet in analyzing what type of businesses are out there. So let's say, you know, you're interested in beauty and cosmetics, right? And this company is selling for, oh wow, it doesn't have the net, so it has the net monthly, so we have to multiply this by 12. So what I would do is, just pull up a calculator. So what we could do is, we're looking at beauty cosmetics, about 45,000. 45, 1, 2, 3, times 1, 2. So it brings about 540,000, and the listing price is about 1.3 million. So this multiple is almost 3. It's not bad, right? 540, 1379 divided by 540. So the multiple is about 2.5. Would you buy? Well, what was the market taking? It's not bad, right? Now let's find one where someone is trying to rip us off. And I want to show you in a different platform, or maybe, you know, just to kind of get you to understand this marketplace. And we can look at commercial real estate as well. And commercial real estate is a little bit different. Let me see, franchises. Let's just search about that. I want to find a listing that someone put out in the market and it's just like way above, like, you know, cash flow 191. So this one's selling below like an almost 1 multiple, like a 1.5 multiple. Why? We want to ask why. Here's a multiple that's about 2, right? Highly rated electrical contractor. Here's a multiple of about 2.6, 2.7. This one's almost about 3 multiple, right? So the owner is probably asking for a little too high, 3 multiple. But this is how we try to find value, right? Here's a salon. Well, no seller financing. That means like the seller will borrow money for your behalf to help you take the company. Oh, here we go. IT services, multiple about 4. I wouldn't buy that unless there's reasons why the multiple will be 4. Now, if you notice in the application software, my favorite segment that I like to trade, the average multiple when we look at it, it's a lot higher. Look at these PEs, right? Most are like negative or not even there because they're negative, and then most of them are just like way too high. There's a reason why it's high. It's a lucrative business model that's efficient. It doesn't cost a lot of time to operate, and that's just how the market prices it in. And not only that, maybe it's the momentum reason. So in many cases, when I see charts like this in earnings and sales, when it's parabolic like this, they just trade at a higher multiple. You see what I mean? So when you go in there and you start analyzing the different businesses that you may potentially want to buy, like for me, finance right here. If I want to buy this, I want to analyze what's the period of EPS and sales over what the earnings and sales over a certain time frame. What's the multiple on it? So with that being said, guys, I just want to give you guys a quick recap and dive a little into these markets because I know we talk about it, and just show you how I analyze it really quick. Again, here's another example. About 3 multiple. Cash flow about 3 million, selling for almost 10 million. So, you know, this is not bad. I mean, considering that the higher you go up in value, the multiple starts climbing higher. And that's what I was trying to draw right here. Right? As you progress up the market segment to enterprise, the multiples become like 20. Down here is like 2 to 3. Interesting, right? I geek out hard to that, man. So I did see a recent listing on here that I was kind of attracted to. Oh, here we go. We got it to work. So let's see if we can find this one listing. Let's see. Social media marketing. Let's see, net, so this one's a multiple about almost 4, right? 4 times. It's an app top 100 grossing telecommunication. The moment you buy it, you make about 700K. Now, if you leverage it, let's just say you pay off your loan, the business loan, then you still make about 300K, or hopefully 200K. So sometimes I feel like this, like, I don't know, at this point I just view it as like, dude, like you could become like an instant, like high income earner by just buying a business and just taking on debt. And we're seeing this in mergers and acquisition all day long. Like you could just So the concept really is you could just buy your income rather than, you know, work your way up a corporate ladder for 15 years and finally earning 200K. Sorry, that's just some of my comments.
So you can finance this through bank loan. Let's say if you want to buy a business.
Yeah, so if you want to buy a business, you gotta think about some creative financing. Like if you don't have the money up front, like one is like you go check with see if you can get a small business loan.
From the bank?
Yeah, from the bank, or like a loan broker, right? Go network and ask around. And if you can't afford it, you could also ask the business broker, the listing broker, which for this one is FE International. You could ask them, hey, could you ask this owner and see if they could, you know, they're willing to take a lower price by financing me some of the cost of the loan, and I'll pay them like as I operate. You see what I mean? So now you might be wondering why do they want to sell? Well, guys, the more that I analyze the markets in the world, there's so many reasons as to why someone would want to sell. Like you might be growing, you know, old and you want to just not operate the business anymore. It costs too much time. Or let's say someone like me, I'm still young and I want to go buy a cafe. After some point of operating that cafe, making like 200K, let's just say, I'm going to get tired and I want to grow this 200K income cafe to 300K, but to grow it to 300K, it's going to cost me, instead of 30 hours a week, it's going to cost me 40 hours a week. So I'm like, you know what, I don't want to put in another 10 hours for 100K. Now, that sounds funny, but get to this level and you start thinking about it. You might be like, you know what, I'm going to go switch over to the enterprise software space and get higher margins and work less. So that's why I'm very fascinated by enterprise software. It's a lucrative market space. It's something that I'm seeing the capital markets are kind of allocating money to, and that's why I continue to analyze it. So that was kind of a quick recap on looking at multiples, and what we just did here was just really the income statement multiple, guys. Let me know if that was useful or in the analysis. So I think one of the cool takeaways or the geeky takeaways is understanding that as you progress up this market segment pyramid, the multiples get different. The businesses get more expensive. So if you want to acquire up here versus acquire down here you might be able to acquire a business alone. Up here, you got to start it with a group, right? And let's say middle market, which is like, in my opinion, where most VC funded startups kind of start. If they could get to middle market, right? You could do VC investments here or buy them out here. It's not bad. In anticipation that these companies will grow up to this level, right? Everybody wants to be a Verizon. Everyone wants to be an AT&T, an Intel, right? 100 billion market cap. So I guess that also applies to investments. If you want to look at just be a pure middle market investor and invest in stocks that go up to enterprise level, like that's what I'm trying to do, then you could do that as well. So I know Splunk didn't do well on earnings. I mean, the market didn't react well. It did well on earnings, but the market didn't react well. But this is an example that I'm seeing that's kind of like lower enterprise and going to move up into upper enterprise. So that's my analysis of market size and how I use these multiples. It's kind of crazy. I am ignoring these multiples, right? 14 times the balance sheet, 14 times sales. It's just the market opportunity is so great that if Splunk ends up owning the market, then I think the value could be, higher. But
How much is the valuation right now?
it's only at 16 billion. Right? I don't look at price, right, guys? We gotta look at. If you want to look at more objectively, you look over here. Because if you look at price at 100, you're like, no, I don't want to buy it.
It seems
Right.
like a fast growing one.
For example, like CMG, $400, but then look at the size. So it's because of the shares outstanding. That's something that we have to continue to analyze. Sorry, you had a comment. I kind of cut you off. My bad.
No, just looks like Splunk can be a market leader in that segment.
Yeah, and so that's why I leverage enterprise reports, Gartner. We talked about it last week. So that was a quick review of fundamental analysis. In this meetup, I tend to go sort of fast on the fundamental analysis, but I don't want you guys to feel discouraged in analyzing the numbers because it's not that hard. It looks hard, but keep practicing, you become more confident. So I thought of essential frameworks that you could apply to get a quick understanding of financials. Another way to apply the frameworks, right? I know how we just did you know, analysis of if sales are going up and if expenses are going down, right? Then the margin right here is increasing, right? Which is good, and we want to see that in great investments. Now, we could apply economic charts to almost anything. I could do something like this. This is just a fun one, all right, guys? Here, let me just erase this, leave some space. This one is fun, a little digress, right? Let's think about working for someone, and business. So this, let's do a three-dimensional chart, or well, it's not really 3D, but we'll add another variable, and then we'll do one over here, same thing. This is just a fun concept, okay? Don't take it seriously. Well, you can if you want. So in this world, we, let's see, work, time, and money. And let me just put money right here, and let me just put blue. All right, in this world, we all work and we all expense our time for some money, right? And I think most people are like this. They want to work more to make more money. Let's change this one to this, right? Most people will put in more time. Ooh, that's not right. Okay, well, yeah, it is. Over time, people want to, you know, they will work more to make more money, right? And the money looks like this over time, right? Money goes up, right? This is the work model. Now, how about the business model? Owning a business. This is what K strives to achieve, right? Over time, I want to make more money, right? But at the same time, I want to work less. Oh, whoa. Is that right? I want to make more money.
You don't need the blue line, maybe.
I messed up right
What
there.
is the blue line?
I had this concept in my head, huh? Okay, okay, I'm sorry, it's the other way. yeah, my bad. So over time, I want to work less. I think that's a smart way to go. I want to work less, and I want my money curve to be higher, right? And I think this is like the 9-to-5 model. I mean, like this. I think this is great knowledge for an entrepreneur, right? You guys gotta understand that over time, the company, because I just recently had my quota increase. I hit my quota, and they're like, "Hey, we gotta raise your quota and shrink your territory." After 6 months, I'm like, dude, why? So it's like people at the top is like, hey, I need another car. Let's make the sales guys make more, get more deals. So we'll raise their quota and shrink their territory.
Wow.
But that's life, right? We all 90% of people are over here, guys. We go to work and we literally put in more time for more money. Is it worth it? But if you just think a little bit smarter and pursue, you want decreasing work and increasing money, right? And that's what I perceive with investing. And this constant training that I do here at Volatility Club, I just got to keep doing it until the momentum switch. I'm also seeing this with real estate. It's an interesting concept. Going the business broker or real estate route, just starting your own business, this is what you achieve, right? Imagine if, let's say I'm on this side right here, this is K's side, right? And I go hire someone, well, that other person's graph is right there. But since I work for GE, I'm over here, and this is what GE is getting. You see the difference? What I produce for GE, this is what they're getting, and this is what I'm getting. Funny, right? So this is how I apply economic concepts to, work, time, money, real life. Just thought it'd be a fun digress. I don't know if that's interesting or not. Anyways, so just a quick recap, fundamental analysis frameworks, right? We're at the end of the day when we invest in the stock market, the way we analyze fundamentals, we're really just looking at the multiple on the financial statements. Either the multiple of the income statement or the multiple of the balance sheet. And we're just addressing like what different efficiencies the money moves around in those two realms. Not only are we looking at the multiple, right, but also the direction. And that's why I drew those charts, guys. The direction is very critical, right? You do not want a company where sales are going this way and expenses are going up. See what I mean? Right? You went from positive margin to negative margin right there. We don't want that. Because negative margin over time will minus away from the balance sheet. Right? This is the income statement. So these are quick frameworks to help you get ahead in investing. I hope that really helps. So that's the quick recap on fundamental analysis. Quick recap on technical analysis. Just to make sure that you guys are kind of trading at the gold standard here. or analyzing charts at the gold standard. Know your order of operations. We had a chat throughout the week, and I just thought I'd take a picture and share it to you guys. So the things that you need to know that come first is price, time, and volume, right? Second to that is price patterns, and then the indicators. Do not rely too much on the indicators. They are all mathematical derivatives of the price, time, and volume, period. So that's why I pay attention to price breakdown, price action in high volume moves, low volume moves, whatever, and price patterns. Those are my bread and butter. And then the indicators are like my salt and pepper? No. But just remember, this is the last thing you want to look at. But I'm not saying don't look at it.
Fork and knives.
Yeah, fork and knives, sure. Remember, most people coming into trading and investing don't have a grasp of what leading and lagging is, right? Leading, lagging. Remember that. Technical indicators and oscillators are derived from price action and therefore should be secondary in analysis. And this is what we talked about throughout the week. Remember, price action first, pattern second, indicators third. Okay, I'm repeating myself. Price action is price, time, and volume. Patterns are patterns of collective price, time, and volume. And then indicators are math derivatives of price, time, and volume. Right? So that's the order of operations that
So indicators kind of just validate what price movement is saying.
Yeah. It's kind of like how we're doing fundamental analysis of the financial statements and looking under the hood of like what multiple is it at, what direction is it going. It's very similar to what is the multiple of price, time, action, price, time, and volume versus the direction of price, time, and volume internally, right? So it's just fancy math, fancy basic math, I'd like to emphasize. The other thing that you guys need to know is definitely know your time frames. And I just want to review this real quick to help you guys. So if you're going to swing trade or invest, right, a longer time frame, I suggest the better time frames in the daily, the weekly, and the monthly. And this is really where we focus on here at Volatility Club.
What do you exactly mean by swing trading? I mean,
Swing trading is like longer than a week or longer than a few days. It's a gray area definition, you know.
It doesn't mean that you are like shifting from bullish to bearish, like or the opposite way around. Like
No, it's just your style of trading.
So
That's
that
all.
is like a week or more.
Yeah,
There's a day trading, there's a swing trading.
Yep.
And then there's a long term.
Yeah, like day trading, you might just sit there from 6:30 a.m. to 1 p.m. and then you're done.
And swing trading is like
Swing trading is like me using my phone to get in, and then I'll get out next week.
yeah,
Or
week
like
10 days.
that 2-week Bitcoin trade I showed you guys a while back. And so now I also want to note that make these your gold standard in flipping around time frames, daily, weekly, and monthly. Right? Make it your gold standard. But I also want to note that you could also flip to the 4 hours if you want a little bit more precision. All right? If you're like a short swing trader, a short-term swing trader, that's optional. 4 hours work with the patterns. From what I've seen.
Like the one who gets out in like 4 weeks, a month, like still the swing trader?
4 weeks?
I mean, like I'm just saying time frame, like what will you call it? Who does get in and a month later gets out?
Was it called a month later? Swing trader?
It's just,
Or investor?
still a swing
You see, it's like gray area.
swing trader. Investor, I think would be like over a year or something.
Yeah, investor would be like over a year, or even like close to a year, right? Like you could say you're a quarterly investor. So you could go as low as 4 hours. Now, I want to show this real quick, right? We have Ethereum right here, and this is a recent price action on the daily, right? We got the head and shoulders right here and going down. But I want to flip over to the 4-hour chart and show you that some of the patterns still play out somewhere in there. You see the charting that I did? You can still play those patterns. If you want to put in the put in a little bit more hustle and start trading shorter term. These days I get lazy, so I'm just betting the bigger picture here. But yeah, definitely check out 4 Hour if you want a little bit more precision. If not, stick to the daily as the main things, right? So that's pretty much a quick recap on that. Okay, so going into today's topic, which is SoftBank. I'm sorry, I forgot this one part. If you're going to day trade, stick to 3-minute and 5-minute charts. Don't do 1 minute.
Wow, that's too intense.
Yeah, 1 minute would be too intense. Like you're a scalper if you're 1 minute.
That's possible if you're not having a full-time job.
Yeah. Intraday trading is just a different art. I don't know. I don't do it because I geek out more to like macroeconomic trends and bigger picture investing. That's what excites me because I want to eventually bet bigger and also acquire businesses that will juice my bets. Anyways, okay. So today we're going to talk about SoftBank or the digital conglomerate, right? You guys know what conglomerates are? Okay, that's good. So if not, I have the definition. Conglomerate is a corporation that's made up. Is what?
Alphabet is now a
Yeah, pretty much. Yeah.
GE.
Yeah, GE is a conglomerate, Berkshire Hathaway, and a few others. Okay, I won't read it just to save time. But that's what a conglomerate is. It's just a portfolio of businesses that, maybe Apple doesn't want to do phones anymore. It wants to do another business model. Okay, let me know if you guys if you can't hear me, all right? But yeah, it's just a portfolio of companies. But what I want to emphasize on is SoftBank, because I'm hearing a lot of news on them, and the biggest VC fund that ever being raised. Majority of this discussion will just be me pulling up investor relation charts or reports.
You picked up this today.
I what?
I'm very glad you picked up SoftBank today because.
Yeah, I just figured something to diversify into. So now you guys know that we live in Silicon Valley, and Silicon Valley is very known for venture capital, right? They call it like Wall Street West. Wall Street West. You got Wall Street in the East doing all the capital market stuff. Over here we got all the venture capital stuff, right? All the high quality tech companies. But I want to emphasize that SoftBank, their investment arm, they have a vision fund. It's the biggest fund like to date in terms of VC investments. But keep in mind, we do have a hedge fund that's 160 billion, the biggest one. So that will kind of give you relative size, and then Apple at 900 billion. Huh? Assets under management. So SoftBank has 93 billion assets under management. So they collected 93 billion from investors.
So how much of their contribution is in that $100 billion AI fund?
Their contribution is like 25 billion.
Okay.
I will dissect it, but I want to also teach you guys how to dissect it, right? So today's emphasis will be on that. Okay, so what is SoftBank? I figured there's this 2-minute video to give you a little background in case you guys don't know who SoftBank is. So bear with me, just 2 minutes of your time for a video. Yeah.
Here in Tokyo sits the headquarters of Japanese massive conglomerate SoftBank. It started as a software distributor, grew into a telecom giant, and now spans many different industries, pouring billions of dollars into the likes of Alibaba, Uber, and WeWork. Its founder and CEO meets with Donald Trump and forms business deals with Saudi Arabia's royal family. And yet, it's a company you may know little about. SoftBank is ranked number 38 on Forbes' list of world's biggest public companies. That's a few slots higher than General Motors and IBM, and far ahead of Amazon, Coca-Cola, and Walt Disney. Its business dealings really know no limits. They include telecommunications, e-commerce, finance, technology services, semiconductor design, media and marketing, a baseball team, and even a robot. This is Pepper. It's a humanoid robot manufactured by SoftBank designed with the ability to read human emotions and even analyze voice tones. So who is behind it all? Founder and CEO Masayoshi Son. He was born in a small town in Japan and moved to California at the age of 16. He graduated from UC Berkeley with a BA in economics in 1980. Son is known for his fierce business strategies, and they seem to pay off. After meeting with then President-elect Donald Trump in 2016, it was announced that Sun would invest $20 billion in the US tech sector. After the announcement in the Trump Tower lobby, SoftBank's stock surged more than 6%, making Sun instantly $2 billion richer. Sun is now Japan's richest man. Yet a big part of SoftBank's success and size may actually have less to do with Japan and more to do with China. In 2000, SoftBank made its most successful investment, putting $20 million into Alibaba. 14 years later, that investment turned into an estimated $60 billion payday when the Chinese e-commerce giant went public. That's almost a 300,000% gain in 14 years. With returns like that, it's no wonder SoftBank's become an investing powerhouse. Last year, SoftBank invested in more than half of the top 10 biggest investments in VC-backed startups. That included ride-hailing giants Didi Chuxing, Grab, and Ola, as well as Flipkart, the Indian e-commerce giant. And those investments are coming whether companies want them or not. When Didi Chuxing and Uber said they didn't need SoftBank's money, Sun threatened to invest in their rivals instead. Needless to say, the companies took the cash. Then there's the acquisitions. In 2016, SoftBank purchased European semiconductor firm ARM Holdings for $31 billion, the biggest purchase of a European tech company ever. Google owner Alphabet also sold its robotics firm Boston Dynamics to SoftBank in 2017 for an undisclosed amount. Much of SoftBank's recent investments are part of what's known as the Vision Fund. It's the largest technology investment fund in history. While the $100 billion fund is primarily backed by SoftBank, it also includes massive investments from Apple, Qualcomm, Sharp, and the sovereign wealth funds of Saudi Arabia and the UAE. The fund has also invested billions of dollars into about 30 companies, including Uber, ARM, Nvidia, and WeWork. It recently announced a $200 billion power generation project in Saudi Arabia, which would be the world's biggest solar project. And it isn't stopping there. The fund wants to become the largest shareholder in 100 tech companies around the world once it's done investing its money, creating the biggest ecosystem of tech companies in the world. Hey guys, it's Upton. Thanks for watching. For more of our videos, check out...
Okay, so that's SoftBank's little intro on who they are or what they do. Basically a holdings company with a portfolio of tech-related businesses. So who runs SoftBank? You guys already know Masayoshi Son. I did a little bit more research on him. Pretty interesting. His beliefs and stuff, and I just wanted to share some of the things that I learned about. I was just really, to be honest guys, most of my knowledge derives from investment reports. And I keep telling you guys, it's just located in the any publicly traded company, their investor relations page, and just swim around in the body of in the sea of knowledge there. It's just awesome. So this is where I really just get the knowledge from. I want to learn how they invest, right? How they maneuver, let's say $100 billion, or what market opportunities that they see. Because after a while, when you understand the fundamentals and the technicals, you want to know the real game, in my opinion, now is like the market opportunity and who's the market leader. It's the competition. So that's why it helps to just analyze all that. So let's see, who is he? One of Japan's wealthiest billionaires, entrepreneur, CEO, and I think he's also a very aggressive deal maker. Age 60, and his net worth right now, real time, it's down. He's like number 100, but it's 13 billion. I thought this was pretty interesting. Why? Don't run this. Bloomberg and their ads making me. So let's take a step back and think about this for a second. Like when let's say if you ever become a billionaire, right? What's the difference between, you know, a normal person who maybe like a couple million net worth, or a normal person who just works their entire life and follows the collective society's marketing, right? In terms of like, hey, go to this school, hey, work at this company, hey, enjoy your vacation here, take your family to Disneyland, put your kids through college. It's like this collective marketing and telling us how we should live, right? The difference between a regular person and let's say a more high net worth person, they have fluctuating net worth. And I wanted to point this out because I just find this is the nature of like someone that got up there. At one point he was like 18 billion, and then he went to as low as 9-10 billion, right? And then we got P-Chain coming in, and then back at 16 billion. So like I've heard this before. Okay, I think Liz told me about this person that came in, who he was a doctor or something, and he said money is just an object. I think that's how they see it. Really, it's just.
Oh, you should listen to Andreas Antonopoulos. That guy. You listen to
Andreessen Horowitz.
No. There's a guy called Andreas Antonopoulos. You listen to 1 hour, the concept of money will be completely upside down.
Yeah. So
he talks about what is fundamentally money, what is value.
Yep.
And once you understand that, it looks like money is he says money is just a language that we use to express a value of something.
And then we're seeing the disruption of that with cryptocurrencies and all that. Like honestly, guys, like my money, my investments or my money fluctuates around, and these days I don't really care about that fluctuation. Like it's just become like a way of life for me, because it's like I'm not gonna, like the way I spend, I'm pretty frugal. I don't go and spend big, and my expenses are extremely low. That's how I treat my money. Up to you guys on how you want to treat it, but the difference between how I see a regular worker and a big time investor, Lester, they fluctuate a lot, and that's something you got to understand if you want to bring your net worth to the next level or your life to a higher standard of living. So that's something I want to point out. Let's see, going back to it. Let me know if you guys have any comments. People online just want to know if you guys are okay, not bored. Sylvia, you got, okay, should be okay. Feel free to comment or anything. Okay, so his belief. So I was looking through his reports, right, and he's a big investor in AI, IoT. He sees this, like, I've never seen a person with so much like conviction in like the way they talk about their investments. This guy's really into the belief of like humans not humans evolving to the next level, but AI. Here, I'll read it. The statement below is from SoftBank's annual 2017 investor report, where Masayoshi is communicating to investors about his belief in AI and how this is one of the biggest investment themes within this century. So we know that the big macro trend is AI. What are we doing at the micro level to get a piece of it, right? If you know that the big cyclical trend or whatever, or the big secular trend is AI, right? Then we need to be playing, somewhere in these trends by working at an AI company or investing in AI companies or learning more about AI companies so that you could be a marketer for those AI companies. Funny, right?
Working for them won't make you rich.
Yeah, because the model that I demonstrated earlier, right? The margins go to the people up top and the time goes to the people up top. But if you don't...
Have you ever done like a deal with a company in a sense like you have invested like 25K as an angel investor in a startup company?
Have I worked that one or?
Have you like done it so far?
No, I've only had experience with
Like I know there's like an angel investor, so you invest up to 50K.
Yeah.
And the first round before those angel, before they got to VC funds.
Yeah. So yeah, like that's what we were talking about another time. We were saying how you can start your own plug and play, a little incubator, and just buy, source these entrepreneurs first. It's all a race, competition.
Or
right?
even you don't need to like start an incubator. You go to incubator because plug and play talks to you. Okay, you want to invest the money. I have the startups. You want money.
Yeah.
I bridged.
Yeah. So I mean, there's so many ways to do it, right? Like how do you want to get there? Do you want to be an expert investor and just know where to aim? But then you're going to need funds, and who's going to raise the funds for you? Right?
Let's say you have your own personal 25K you want to.
Oh,
As an angel
as an individual, 25K.
Yeah, as an
That's
angel
like probably a 5 to 10 year time frame, and I don't
maybe
think
5 years.
I don't know the exact like.
But have you started playing that game or?
No, I haven't. I want to break into it another way. Like I want to be the deal flow person, not so much of the
Angel investor.
Yeah, because you got to command a lot of capital, in my opinion.
I think you get blocked for a while.
Yeah, look, here, I'll show you this. Maps, Google. Okay, Cupertino Main Street. Let me see, Cupertino Main Street. So funny, like there's venture capital firms like everywhere. Like you just don't know it, right? So I want to bring this one up because I was just walking around the other day. You know,
Walk around the Sandal Road.
yeah, almost. Well, I've been there. I worked there before, but Sand Hill Road's a little bit different. Now this would be interesting. Okay? I'll show you this. Like I was just walking around. You guys know where Sugar CRM is? So this is Cupertino Main Street, right? And my plan is to get into the Keller Williams over there, because I talked to the assistant administrator there. She said that the rooms are open to agents on the weekend. So I like to go to this cafe right here. I'm not marketing anything, but I go there and study, right? And the funny thing is, like, I always appreciate the properties above the cafe. I think these are like $1 million properties or condos or whatever, right? I don't know, but 2 of them are owned by real estate agents because they market themselves on here, right? But if you go a little bit down, right, I would take strolls around Cupertino when I just am overloaded with investment educational stuff, and I would just walk down here and you hit the corner, and this is where Sugar CRM is. But little did I know when I walked in there, there's this venture capital fund called Silver Lake. Anyone heard of Silver Lake? They're in this building right here. Silver Lake Capital Management, I think. It's like on par with Sequoia.
Oh, really?
Yeah.
Never heard of them.
So Silver Lake, the global leader in technology investing. They're right in Cupertino, right? Think about it, guys. You guys are, we're paying for a high standard of living, and we have access to these networks. You could just go in here with your coffee and maybe bump into a VC and say, hey man, let's chat about investments or something. Not saying you should do it like that, but I just want you to keep in mind that there's a lot of VC firms, right around us. I think a lot of people take for granted. If you guys remember, just down the street, we talked about a hedge fund down there, right? The guy on The Big Short, I forgot his name, Michael Burry or something like that. So there's a hedge fund on the same street, there's a venture capital fund on the same street, and that's why I want to break into this market somehow. But yeah, Silver Lake, you guys should study their portfolio. And last time I looked at this, they do a lot of infrastructure investments, if I recall. Here's their portfolio, right? So that's something to keep in mind. So this is something I want to read from one of the investment reports before we dive in. This is what Masa himself said. Until now, human beings have been the most intelligent living things on Earth, and we have made use of this intelligence. I am certain, however, that within this century, AI will overtake human intelligence at a point that is referred to as the singularity. This will be the greatest paradigm shift in the history of humankind. The coming of the singularity will redefine every industry, open up new business opportunities for existing industries, while also creating new industries. I think there's like a big, from this statement and also knowing the macroeconomic trend, there's a huge opportunity for grabs on this next market movement. It's what?
It's like 2007 when the mobile market
It is.
started to take off.
It is.
For the next decade.
I'm glad you brought that up, because when I started analyzing the portfolio of SoftBank, they're very focused on mobile. His most precious investment, at least that's what my takeaway from reading the reports.
Chips are gonna be the super important.
Yeah. So Masayoshi hints in several investor reports that ARM is one of his most precious investments. It makes sense when you analyze the business model and market opportunity. So this is the statement that he said: acquisition of ARM, in his words, the gem of the technology industry. The biggest global supplier of the technology used in these essential chips is ARM. ARM's processors design enable outstanding power efficiency, and ARM technology is used in the main chips in over 95% of smartphones today. Now, we gotta talk about smartphones. Apple is #1 for a reason. Apple, Samsung, Apple's market cap is $900 billion. There's a huge macro trend, right? If you're selling phones, who's the distributor? Who's benefiting from selling phones? AT&T, Verizon, Sprint, T-Mobile, they're the distributor of the phones, right? So if you look at Verizon's and AT&T's market cap, they're up there as well. It's insane, right? VZ, Verizon. Let's go to telecom, domestic, and then we'll filter it by market cap. Look at the top. $200 billion for both AT&T and Verizon. I don't know why they're both 200 billion. But it's amazing. Like, this is a world trend right here, or a macro trend that you gotta pay attention to. I have been longing to get. Yeah, I'll show you in a bit. So I have been longing to get my hands on this hidden gem of technology industry for over 10 years. He bought it for like 30 billion, if I recall. And finally, in September 2016, we managed to acquire it. One day, when I look back on my long life as an entrepreneur, I believe that ARM will stand out as the most important acquisition and investment I've made. That is how highly I regard it.
Well, that is 2016, but he made a key investment in the past that made him a billionaire.
Alibaba?
Huh?
Well, Alibaba's one.
Baba is one, but what he's saying
Look,
is futuristic because
look,
AI will need a lot of chips.
Look, we know, we analyze a lot of market caps in here, right? I just showed you that Verizon's 200 billion, AT&T's 200 billion. He bought ARM for 36 billion. What do you think is his upside? I think he's thinking 4x at least. And well, we're talking AI, the biggest market opportunity of the next century, or within our century, which is 5 trillion. It's really impressive.
So yeah,
That's his projection, right?
Yeah.
So we need to see what happens.
We gotta see what happens. Definitely. So skipping ahead a little bit, this is this is the chart. Like I thought about it. Like, what's the difference between I'm sorry, not AI, ARM and Intel. Intel is focused on high performance processors. ARM is focused on low energy efficient processors.
low power.
Which mobile, right? And we look at this, mobile sales skyrocket.
Low power.
Yeah, low power. That's what they're focused on. Look at the sales for mobile phones, right? You don't see. I haven't heard of Intel chips in phones yet. Like,
They tried, but again,
too much energy.
No, it's like the architecture difference. Their architecture came in 1970s and 80s.
Yeah.
So now they can't change the architecture overnight. And ARM is a race of risk architecture. That's going too much into technical details, but fundamentally that architecture was defined for very low power devices like phone, tablets to extend their battery life.
Yeah. So he basically bought out that market, if you think about it, right? This is Intel right here, ARM chips, Intel microprocessors. When I sat on the Intel earnings call, I know you work at Intel. Let me, I'll do the talking, but I'm just kidding. But basically, my takeaway is that they're going all data center. They're focusing heavily on data centers.
Because they are high power.
Yeah.
So it's more logical.
Yeah, it's a
They
logical
still control
mix.
like 99% of the data center market.
Yeah.
Primarily because
Yeah.
you need more of compute than the power. But in your mobile phone, you need more of battery life than the compute.
So we know data centers are a trend, right? At least that's Intel's money right there, right? If we go to industry and REITs, I talked about this, I showed you guys earlier, I think, let's see, REITs. It's awesome because I analyze it in real time, right? What's the number one performing REIT in the office space? The number one performing REITs in the office space by market cap, sorry, not number one performing, but number one biggest size, Digital Realty Trust, right? And I have the report right somewhere, right here. Digital Realty Trust. They're the biggest. Let me just show you one more time. Market cap down, right? And the specific industry segment that we're analyzing is REIT office. They're the biggest in the space. And they focus on data. They're a data center play. Data center real estate. It's incredible. I have this up because I want to show you their view on the macroeconomics. If I don't have time, I could send you the link to this as well. But now we're just connecting the dots over here. Okay, let me repeat one more time. So the biggest REIT by market cap is a data center REIT, right? So data center real estate is hot. I confirmed that. Well, I kind of confirmed that with that report, and also talking to my brother-in-law, who said that data center development is really hot, but he doesn't know how to break into it. So that's one market direction. Another market direction is Intel saying that they're going to focus less on PCs and more on data center processors. So Intel's at what, 150 billion market cap, 200 billion, I forget. 200.
225.
Yeah, they're focused on data centers. So we know there's growth there. If you want to invest your money, look for growth. Now, that data center is one segment. We know Apple is the biggest company and they do mobile hardware, mobile phones. And this guy just acquired ARM at 36 billion. So you see how it's a separate segment, but that's the direction of the market. ARM really, it cornered the market, at least from the report that I read.
So it's like the more devices you have out there,
Yeah.
those devices may get more of ARM processors, but the devices need to communicate back with the cloud, and cloud is in the data center. So either ways, Intel wins. It is more on the back end, which is less visible to the people. That's why people say, oh,
So
it's
ARM is like the front end, if you think about it. Yeah,
yes,
that's
yes.
interesting.
So it's
yeah.
in your device, but the device is talking to the cloud, and cloud is in the data center.
Yeah, that's why I love teaching, man. I learn stuff from other people. In terms of looking
So
at
you see
SoftBank,
servers, Qualcomm recently just gave up on doing the servers based on ARM because ARM is not very good when it comes to high compute.
I'm sorry, Qualcomm gave up where?
The Qualcomm, Samsung, and all these companies have been trying to use ARM for the servers, but then Qualcomm recently announced they might be just giving up on the servers and the data center market.
Wow,
So
that's a huge market though.
It's a huge market, but they got success with ARM. So ARM also has its limitations. It's good with the low power, low compute,
Yeah.
but it's not very good with the high power, high compute for like servers and data centers. So
Interesting. Yeah, so this company is a very interesting company, but I want to point out that they do have 90% market share, and they want to get even more market share in the mobile application processors. Right? His view is that there's going to be processors, ARM processors, in a carton of milk. That might sound crazy, but it's a that's where we're going, I guess. They want to increase their network equipment market share. Look at their servers. Right now they have less than 1% of servers, because I'm assuming Intel has a bigger market share, but they want it greater than 20%. Embedded intelligence, I think this is like chips in like milk cartons and stuff. I gotta double check on that. But they want more than 40%. And then look, another one, automotive, right? We're hearing a lot about autonomous driving. It's gonna be reality. He's saying that the newest cars right now, 2018 cars, they have like 500 ARM chips in there. Can anyone confirm that for me? I mean, I heard from Masa himself, but I don't know the engineering aspect or the technical aspect of that. 500 ARM chips in a 2018 car, any car that's released today. Incredible. So yeah, he really thinks that the ARM acquisition is a gem, right? In fiscal 2016, 17 billion chips incorporating ARM technology were shipped. The total global population is 7.3 billion, so that works out to be about 2.4 chips per person, men, women, and children. What's more, these figures are continuing to expand exponentially. One day, ARM-based chips will not just be in smartphones, automobiles. ARM is not. No, so Liz, he bought out ARM as a European company, and so now if you want exposure to ARM, you got to buy SoftBank. Funny, right?
this is like drew like a Gartner style diagram for you where in the ecosystem. So here you have the power,
Yeah.
low power, low compute, mobile phones, tablets.
Wow.
You go to high compute, low power PCs.
Yeah.
Intel's market dominates.
Okay.
And then high power, high compute.
Let's
servers.
review this at the end for sure.
Okay.
Just the people online, they can't see it.
Sure.
So there'll also be one day ARM-based chips will not just be in smartphones, automobiles, and electronic devices. They'll also be running in running shoes, glasses, and even milk containers.
That's true.
That's true. So we got to figure out
That's
how.
a real IoT.
Yeah, we got to figure out how to get exposure to this, right? As an individual, if we want to ride a market movement. But I just want to point out that market exists. Now, it's similar to like how GE views the industrial segment, and they want to flip that entire segment. This guy, by acquiring ARM 100%, he bought the whole market trend. Insane, right? If you kind of think about it, he bought the entire growth, like
He bought the IP distribution.
the design.
Yeah.
They're a design company.
Yeah, ARM doesn't produce any chips, so
You can carry nowadays produced by any TSMC. Or
So this is speaking of business model. This is the business model of ARM, right? The semiconductor partner. Let's see. How should I explain this? The OEM customer. This is the.
So this is, I can explain you.
Yeah.
So something like ARM designs the IP.
Right.
It
They
doesn't,
design
it doesn't manufacture it. Something like a Qualcomm, which is a
Qualcomm,
semiconductor partner.
Samsung,
Right.
They make the customization to the IP.
Yep. And then
they
they sell.
license it from ARM,
Yep.
and then they get it
And then
manufactured
LG,
from
Xiaomi,
TSMC or MediaTek
Yeah.
manufactures it. So it's like 3 players in the ecosystem.
Yeah.
One does the design house, ARM is the design house, Qualcomm is the licensor, or Samsung, they license it from ARM, they do their own customization, and then they get it manufactured from like a TSMC, MediaTek,
Like Global Foundry.
Global Foundries.
Yep. Yeah. So that's the business model. Very exciting. Another way to understand the world and where we're going, what I like to do. What I notice is, I mean, if you ever progress up the,
What I foresee is that the SoftBank will buy one of this, and then he has handled to both of them.
what'd you say, the soft man over here?
SoftBank.
Oh, SoftBank will buy one.
He's generally, right now he has made his entry to one
Yep.
portion of the 3 players.
Yep.
The next could be this one. So Qualcomm CEO was trying to go private by asking the money from SoftBank invested.
Yeah.
So if SoftBank now owns one piece, it starts owning the other 2 pieces, it owns the entire ecosystem.
Yeah.
And
Yeah.
it's gonna happen sooner or later.
Yeah. So guys, when we're analyzing SoftBank, it's just imagine the globe in your head, and this guy's making economic ripples.
That's his idea of $100 billion to change the way Silicon Valley
Yeah,
operates.
it's exciting. Yeah. Okay, so that's his most precious investment, at least from me reading reports. Why do we want to learn about SoftBank, right? SoftBank right now, market cap in USD, you got to convert it, is about 80 billion in market cap. SoftBank is an aggressive digital conglomerate, from what I'm seeing, that appears to be the most innovative, in my opinion, entity in the market right now. Right? Because we got other conglomerates that are not as innovative, or soon to be innovative. We got GE at 130 billion, Berkshire at 480 billion. Don't forget Icon Enterprises at 12 billion. And there was another one that I wanted to analyze and show you guys today, which is IAC. Oh, I have it down here.
That's my favorite.
Yeah, that's your favorite. I love dissecting the portfolio and seeing like what these investors are holding, because it's like, wow, this is like kind of like art, you know. If you learn to appreciate art, it's a different form of art. So this is, I filtered by conglomerates, right? And biggest down, Carl Icahn. So just understand like the different types of businesses out there. Again, conglomerate just means that you own a few different business models and such. So those were the other conglomerates on FinViz as well. Another company I wanted to eventually talk about is IAC. IAC is owned by another billionaire. The guy's name is Barry Diller, if I recall. And it's comprised of several digital internet businesses, right? Because as I'm learning more about the world, the different types of investments out there, I love the most efficient one and most valuable of my time. And it keeps pushing me back to digital software or something tech related. I want to own those companies one day. Maybe I'll find my entry in the back end through a small business, right? Accumulate to get to the next level, buy your income stream or whatever. But you got to understand the space. But it's my stepping stone to get there, but I'm not quite there yet. I'll get there somehow. Dreams, right? But this is another company that I wanted to talk about. Just real quick, they own, it's a conglomerate, in my opinion. I think it's not filtered as a conglomerate on FinViz. Right? It's considered yeah, they might be too focused in a portfolio of businesses.
Look at
But yeah, the margin's impressive, right? And sales are consistent. It's just that this is telling me that expenses are a little high, but that's okay. Once you clear the expenses, smooth sailing. So it dipped and it recovered pretty well.
Oh, that was
50%
that was market news when Facebook announced
was
the
it?
dating feature to match, and IAC sunk.
Yeah, they also own Match, MTCH, the one you talked about, right?
And I loaded more
Do you like this one?
because I loaded more because it was like Facebook announced the dating feature.
Yeah,
And it
yeah.
sank, but it was hammered for wrong reason, and it started coming back again.
Yeah.
Same reason IAC got hammered.
So I'm not trying to be like Andreessen Horowitz, but software is, in my eyes, kind of eating the world. So I want to emphasize my investors more on software, enterprise software, mass consumer software,
And
right? Any type of software. We will review this company another time.
Match could be as big as LinkedIn, if you know what I'm saying.
It's as big as LinkedIn.
It could become, or even bigger.
Yeah. Speaking of LinkedIn, so Liz just asked me, is ARM publicly traded, right? And the way I view it is, if SoftBank buys it, then you want that exposure, you gotta go through SoftBank. Just like how I like LinkedIn, but if I want LinkedIn's exposure, investment exposure, I gotta go through Microsoft now. They bought the growth, and so I'm anticipating that that LinkedIn's growth will be computed into Microsoft's market cap. That's kind of how I invest or trade. So we'll talk about IAC another time because we're kind of running short on time. SoftBank's portfolio holdings reveals major macroeconomic themes. Another reason why we should pay attention to it, such as IoT, AI, mobile hardware, software. Keep in mind that these huge economic transactions are not deployed for no reason, right? His transactions are investments that we got to study and figure out how we could invest around his economic ripple.
So can we buy from OTC markets? SoftBank is listed.
I think so, yeah. OTC is over the counter, so it's just there's no like middleman, like an exchange that will trade it for you. You're buying it from the hands of, I guess, someone else. There is wealth of investment knowledge that we can learn from SoftBank's transaction and leadership. Oh, okay. SoftBank's Vision Fund is biggest VC fund of all time. Than Sand Hill's best VCs, and that's why I showed you guys below. Let's look at it real quick again. So this is the impact of SoftBank's Vision Fund. So we'll go into detail a little bit. So we all know Andreessen Horowitz and his multiple funds, right, all the way up to 5. It's only about 5.6 billion, and we know about Sequoia Capital, Global Growth Fund 2, is only about 2 billion. All right, and we also know KPCB, one of their funds is 1 billion. Right? These are like top tier names. And then we have like over here like Goldman Sachs Fund 6 at 20 billion. This is SoftBank. So get the relative sizing in your head, correct? And you're gonna be like, whoa, like SoftBank is up in Redwood City, is it? Redwood City. Yeah. So let me show you. I mean, once you get that big, you got offices around the world. Maps. They are in San Carlos, right there. It's amazing, right? Learn to appreciate where we live, and we're so close to the offices of these economic ripples. Yeah, so that's why I my wife is like, maybe one day we should go live in Singapore, and I'm like, baby, this is the place for me.
Should do it for sure.
The excitement in this area is just too overwhelming, because I know the underlying, right? Anyways, a little digress, a little interest. So going back to the top over here, what I wanted to show you. So what is SoftBank, right? The structure. Wait, did I skip anything? So these are all the decks, the links to the decks. I will forward it real quick. But basically, the rest of the conversation is going to be about these decks. So feel free to check out those decks. That's really how I derive my knowledge in, markets investment.
Thanks for putting all this together.
Hey,
cool stuff.
Yeah, you're welcome, man. Like that's the thing. Like too many investors or traders, they start reading like news from people who read it from another source. It's so derived. It's like going back to what I showed you guys earlier about the lack of like, the leading is the price, time, and volume. I tell you guys to focus on this, right? Same thing with the fundamentals of the reports. Let's focus on these reports that are coming directly from SoftBank themselves. You asked me earlier where did I get all this. Let me just do a little quick refresher on how I find stuff. All you got to do is put in any publicly traded company and put in so for this example, SoftBank Investor Relations. That is the main portal that they have to, satisfy our consumption needs, our investor consumption needs. So go in here and then you just go around and you just swim in an ocean of knowledge, my friend. Events and presentations where I like to go first because that's where all the reports are. And they all look the same eventually, these portals. And look, see, presentation material, etc., etc. So I was able to derive some awesome reports from this. For example, one is the fiscal year, right? The detailed one on their earnings. Another one, this one's a less detailed one if I recall. This one is his vision report, or at least I interpret it as his vision report. Pretty interesting. And then the ARM report, all in the links, all right, guys? But today we're going to review this one. So let me just make sure I go through this. So analyzing SoftBank, like the structure, you got to understand what are their core businesses. Their portfolio holding structure. Notice that at the top top right here is SoftBank Group, which is the holdings company, and then directly below it is the core businesses. So this is what SoftBank is. In addition to the core business model, it also has an investment arm called SoftBank Vision Fund. And it's very similar to like if you want to formulate your own LLC and all that. So this is the structure, guys. At the top, you got SoftBank Group, and then the core businesses: Sprint, Arm, Yahoo Japan, Alibaba, and then some other acquisition they made recently. And then this is their arm in investments, right? Just like how Silicon Valley Bank has a venture capital investment arm for their own returns. So pretty interesting. Some of the companies that they're invested in. Additional structure slides that are in the reports. Right? The core businesses, like you might not understand what their business models are. So let's jump right into it. I have it over here and we'll go down. So in the report, if you pull it up, we're looking at the 2017 annual investor report. It's more detailed with images. You know, a little like our vision, starting with phase 1 where Revolution 1 pioneering software distribution in the PC era, and then Revolution 2 creating new industries with the internet, and then Revolution 3 transforming content and communication through telecom and broadband services, right? If you think about Verizon has two business segments. One is called Verizon Wireless, the other one is called Verizon Wireline. Yeah, pretty interesting. And if I recall in the reports in Verizon, they're talking about moving away from like selling phones, right? At some point, the demand for hardware is shrinking, but there's increase in demand for video, data, and like 5G wireless services. So that's pretty interesting. But moving along, Revolution 4 is what Massa sees in this next century, or this century. So this is his greatest investments. At least that's the takeaway that I'm getting. So he talks about some of the companies that they acquired, right, that will be connected to IoT. He also talks about like some of these satellites, LEO satellites. We'll talk about that in another slide, but I just want to breeze through and just kind of show you what these reports look like. It talks about the leadership. Let's see, I want to show you the structure. So it'll get into different segments, right? Like domestic telecom business strategy, and you get this CEO for this segment to talk about. He's going to talk about what he sees in the segment, what's the investment opportunity, what's the strategy, et cetera, et cetera. Moving down, because I want to show you the structure. Right here we have the ARM business strategy, which I think you might want to read. Down here is, this one's the investment strategy. They acquired another company called Fortress Investment Group. You just gotta read this to know that, right? But I'm looking for this one particular slide so I can show you the financials. Is it this one? Here we go. Okay, let me zoom in. Okay, so summary of their segment, right? This is their core business model. Keep in mind, this is not going to include the vision fund. It doesn't talk about it. It just talks about what is this business and their business model. One segment is domestic telecom, basically like a Japanese Verizon, right? And then the other segment is Sprint. So he has USA exposure and Japan mobile communication exposure. So those are the two markets right there. And then he's also exposed to e-commerce, right? Internet advertising, e-commerce, membership services. I didn't know they had that. Distribution. So if I recall, he originated as a distributor, technology distributor, a mobile technology distributor. It's still there, I guess, in his core. And then as of most recent, or 2016, ARM is his other core. So this is the business, what it composes of, the net sales, if you want to look at it, and the margins, right? Do we care about margins? You want to know? So they're domestic about 22, Sprint about 5, Yahoo Japan about 22, and then ARM is about, is that 11? Yep, 11. So that's the report on that. Let's move down. I know we're running out of time here. I just want to make sure I show you some of the highlights and just how to analyze this report, right? And then after that, you get to the financial section, talk about all the consolidated financials, which I hope you learned to read. I wanted to read some of it today, but I guess we took a little bit too much time in the beginning. So we'll go down to the structure. Keep in mind, you don't have to read the whole thing, and I'm just using the table of contents right here as a cheat sheet. So we're going to go to corporate information. So this is what I like to do on my weekdays and weekends. I just like to read investor reports, because you learn a lot. I'm trying to find this one. It goes into a lot of detail about each market segment. Okay, so this is the organizational structure, right? At the top, you got the board of directors, the C-level executives, and then other committees or whatever. But they got a finance unit broken into like other like budgeting, capital markets, global finance, investment planning. Helps to know structure, right? Business unit, sprint business, and then what was this, new business promotion, group management, accounting unit, legal unit, administrative unit. They don't have a sales and marketing because I think it's in their core. Stockholder information. So I wanted to point this out right here. I have it on the, right here. You guys ever think about how many shares a CEO would hold? Right? Masayashi Son holds 231 million shares.
21%.
Because it's in the thousands. 231 million shares. That, keep in mind, every dollar that fluctuates, his net worth is going up and down 230 million. You see why I pulled up that billionaire profile earlier on Bloomberg? And then he owns about 21% of the shares. Shares issued, stock information as of March 2017, and then shareholding structure, right? We want to know who are the other players that are playing this game. Foreign institutions, big chunk. Individuals and others like us right here, retail, smart money, dumb money, I don't know. Financial institutions like mutual funds and stuff. This would be like foreign mutual funds and hedge funds and foreign people, like US holders for this specific company. Other companies, right? Like someone like Apple could be buying shares, about that much. And then financial instrument firms. This I interpret as they're creating a product and they're just holding these shares in there to make a product. But that's pretty much it. Let's see what else. Let's jump to the reports. So that's one report. This is the ARM report. I don't know if you want to check this one out real quick because we got about 10 minutes. I want to show you his vision report. So this report is interesting because he kind of did a presentation on the Industrial Revolution, right? And how things are becoming with capital, cutting edge technology. And then eventually, the history, steam engine, automatic loom, steam locomotive. Innovative technologies change the world, how he views the world. We're going from industrial revolution to a word that he uses very frequently, which is information revolution. And basically before it was enhancement of the body, now he's talking enhancement of the intelligence. Very interesting. Just breezing through here, information revolution is composed of internet, IoT, and AI deep learning. AI is becoming the core of various industries. We really need to figure out how to get this type of exposure. We got to figure out what public companies are investing into AI, and so we could be a derivative of that and get that derivative or derived exposure. AI deep learning, some more. Sorry guys, I'm kind of rushing through the end here because I might not have time to show you it all. It talks a little bit about ARM.
This is the key. 90% of IoT.
Yeah, 90% of IoT. Smartphones, modems. There's standalone modems and mobile phones. Oh, really? Huh. Automotive, infotainment, wearables. See, wearables is going to be big too.
So models can be integrated as well as standalone.
Yeah. So this is what I told you guys earlier about one of his other great investments, right? OneWeb, the next generation of LEO satellites. So basically, he's saying that you could reduce the latency by making the satellites closer to Earth versus the standard that they have right now. So there's going to be a lot more things flying around the world. Let's see, everything connected, APM, IoT 1 trillion. Let's see what else. Big data, AI, singularity, birth of superintelligence, right? Robots with superintelligence, Boston Dynamics, a new world where all industries will be redefined, a world without car accidents, autonomous driving, life expectancy of 100+ years. That's what they're seeing, greater predictability with all these IoT instruments, coexistence with smart robots, and then their track record, which I won't review. Here is the, I was going to jump into financials, but it might be too. Maybe we'll hold it back for another time of practice, because I don't know how you guys will respond to like looking at financials, right? Like you might want to see like what portion of sales, right, that their core businesses have. But you guys have reports, so you could jump into that because I'm running low on time. Let's see. I wanted to point out the one last thing, which is forecasting future growth, ARM products. No. Let's jump to this. Bridgewater, SoftBank investment product. So we briefly looked at the core business models of SoftBank, right? And you guys saw the structure. It looks something like this. This is SoftBank, right? But keep in mind they have an investment arm that does investment advisory or venture capital, and that's SoftBank Vision Fund. It's huge, 100 billion. And I'm reading some of the news and reports around what he's doing, and it's putting a lot of pressures on VCs around in the Bay Area and stuff, because that 100 billion is eating into their lunch too. So think about it from a valuation standpoint. If this guy says he's going to deploy 100 billion into tech startups in the USA, he had a meeting with Trump, right? If you guys recall that one picture, he's in a red tie and stuff. He talked about how they negotiated a deal, 25 billion into US tech. Well, I mean, I think we're like one of the targets here.
That's good in a way.
It's good in a way.
Because you have money flowing from outside, so there's more free capital to do more innovation.
There's pros and cons, right? It's good in a way for us, and it's also bad in a way for us.
How is it bad?
It's going to be more competitive. I mean, opportunities are going to be endless, right?
I think it will fuel the innovation much faster, like the AI, especially the AI domain.
Well, I guess I'm speaking on behalf of like millennials. If millennials don't pay attention to this, our rate of survival here kind of goes down.
No, as I said, there will be new industries created. Every time there is like industrial revolution came, that also created new jobs.
Mm-hmm.
It took away some of the old economy jobs. So every time there's a change like that.
Let's apply some economic strategic thinking here.
I mean, if you see like the wireless mobile phones came, it took away all the landline phones and the copper wires, but it created so many more jobs.
So SoftBank Vision Fund, they got 100 billion, and they're going to deploy it, right? If they're going to deploy it,
It's not just for US, it's
it's global, it's European and all that.
especially China.
But we know that they're going to deploy this amount of capital, and so who's going to benefit from this? Entrepreneurs, startups, small startups, or you could call it SME, small to medium-sized enterprises. They're going to benefit investors, right? It's funny because it's like everything comes down to almost like a problem and solution. The problem here is we got 100 billion, and the solution is investments, right? Just like how he got funded by Saudi Arabia, Sovereign Wealth Fund or whatever, basically saying the guy needed to diversify into tech, or get the country away from oil and diversify more into something else like tech. So it's problem meeting solution. That's really what happened. They had a meeting, and that's how the deal went down. You guys recall in some of the news that you've seen out there, he said 45 minutes or 1 billion per minute in 45 minutes. They had a 45-minute conversation, and the way the deal went down was every minute equated to 1 billion. That's incredible. So this is why I personally like sales and marketing and stuff, because it's not just, I mean, it depends on the personality, right? Like if you're more of a shy person and you're not active in like socializing, then you might want to be more of an expert in investing and deploying capital. But let's say if you're more of like a extroverted personality, you're not shy, then you could go out there and hunt for deals. Keep in mind, this guy's a deal hunter. He's aggressive. I mean, for him to go meet up with someone from Saudi Arabia, get 45 billion, for him to meet with Trump and say they're going to
deploy.
deploy.
Traditionally shy guy, he says.
It's what?
He was also shy, as like an introverted guy.
Yeah. So I guess, you know, as from a personal development perspective, like anyone can be extroverted and do a deal. There's nothing. Look at me. I used to be really shy, and I came from a technical like finance.
I think extroversion is overly valued in US. In the rest of the world, it's not really an asset. It can be seen as like
Yeah.
negative. Like in US, much as like the louder you speak,
Yeah.
the more you.
The other thing too is like if you yourself can't do it, you could leverage other people, right? If I don't have the technical aspect, like let's say wave theory, and I go into that guy's wave theory blog to kind of outsource my wave theory analysis. It's a lot about teaming up and stuff. But I just want to make sure I covered everything here. Talk about this fund. You guys might be wondering, what is the fund invested in? I do have a chart here, but you could also find the detailed report on there. I'll put the link just so you guys know. Here we go. So this is some of the investments of SoftBank's Vision Fund. About 10 billion to Uber, 8 billion to ARM Holdings. I think ARM might have a investment arm. Nvidia, WeWork, and then you talk about Flipkart. Yeah.
They just sold all their Flipkart stake to Walmart, just like
To Walmart.
3 weeks back.
So Walmart took the investment.
Walmart took all of the.
Yeah, because that's their bread and butter.
But they made a huge killing on the investment in Flipkart.
So if you guys notice something here about the land of Silicon Valley, it's like it's lucrative to get into real estate. It's lucrative to get into software sales. It's also lucrative to start a startup and get bought out by. Starting a startup that you know a big enterprise is going to need that solution, and they cannot adjust to that solution because of compliance, legacy company issues, or too slow to move. Whatever reason, a small entity can move fast and adopt great technology fast. If I were to, if I want to break into this real estate agent job, right? I'm gonna leverage, enterprise level technology. I'm gonna use like Salesforce and email marketing tools and all that to get my footprint out there. I know like some of the real estate agents are just using like Excel sheets. So it's competition and productivity here. If I want the deals, I gotta work harder. Just the nature of sales. But just want to show you guys like what they're invested in. If you want the detailed reports on like what each investment is and what the business model is, this is the link. And then it'll show you the investments right here. Outline of funds and segment. Right? Oh, is it this one? No, wait, major investments. There we go. So, what's the name of the company and what's the business model? AI-based autonomous driving. That's one of their beliefs. Online retailer of licensed sports merchandise, e-commerce, cancer diagnostics. These are things to look at. So I think if you're an entrepreneur and you want to come up with like startup ideas, try to play into their ecosystem. Try to start a startup in their ecosystem. If I could, catch some momentum and like money, and then get into like this venture capital game, I would start to try to acquire the mini players around their investment philosophy. Just like another game to play. On top of trading.
WeWork, I think, recently bought Meetup.
You what?
WeWork bought Meetup.
Who?
Meetup.com.
Oh, Meetup? Really? Oh yeah, you're right. Yeah, you're right. I see. Oh, I hope they transform it and get more people to my Meetup physically. Huh? Just kidding. No pressure.
Again, I would call it a social dating meetup, and that WeWork is a bigger social professional dating.
Yeah. I really like software at this point. I don't know. It's an interesting segment. You guys online, I hope you guys are hanging tight. Hope it's interesting for everyone. But this pretty much concludes what I have to talk about for SoftBank. We could review the financials, but it might be a little on the boring side. But I definitely would recommend as an exercise for you to become better at financial analysis, just to analyze that. And then if you come from a more technical background, maybe one day you could automate that concept by just analyzing the charts that I put. Because that's really all I'm doing in my head if I were to think of myself as a robot. Right? Are they making money quarterly? How are they deploying the money? Their assets, their income, et cetera, et cetera. It comes down to analyzing the market opportunity and the race for that market opportunity, which is venture capital stuff. Let me see. I did have this one report I wanted to share from Digital Realty Trust. Again, guys, this report's coming out in about one day and 12 hours. Is this by the, let's see, one day, that's tomorrow. Okay, so maybe by Tuesday. we're gonna circle back and do a session on macroeconomics again. Right? We go around the world in this club. I hope you guys don't get overwhelmed with everything that I've talked about so far. I'm curious to know if you guys have found a club out there that are similar to mine, so I could go to it. Have you met any?
Yeah.
Really?
So there's one in this room that happens every third or fourth Saturday. The guy just talks about options.
Oh, okay.
I mean, it's not as good as.
Oh, is it the Indian guy, right?
Yeah.
Yeah.
Have you attended his?
He used to come here. His name is
Ashok.
Yeah, Ashok. Yeah. Yeah.
I mean, he's quite conservative and selective, but it's good always to know some other perspective. At least it helped me calibrate my like window of perhaps playing too far, and then so it's good to learn.
I want to show you guys. I did have a video on Real Vision. So last week Steve came in. We talked about Tesla. Closing statement here. This is a 7-minute video on shorting Tesla. And why this guy sees it as a short. I decided to sit on the earnings call, and I was kind of disgusted by the lack of confidence in the CEO. I'm sorry. Like I didn't even. Okay, I ended up not even listening to the earnings report because he didn't sound confident. Yeah. I mean, oh man, that's awesome. Thanks for the comment, Steve. Warms my heart, man. I really want to take it to the next level. So let's listen. If you guys don't have the time, you're feel free to leave. It's kind of long. It's 11 minutes, I guess. I guess I'll probably just leave it on for 5 minutes. But this is pretty much it for today. We'll continue next week. If I get the report dissected in time, I'll probably talk about gold and all that next week. If not, then I'll figure out something for content. But let's listen to this. So this is from a hedge fund manager talking about his short on Tesla and how he educationally suggests buying puts out of the money.
I'm Justine, and welcome to Real Vision Trade Ideas. This is where we give you actionable trade ideas from some of the smartest minds in the finance industry. We'll discuss the catalysts for each trade, the risk and rewards, and finally, look at how you, the investor, can get involved. Today is the 5th of April, and I'm sitting down with Mark Spiegel, managing member at Stanfield Capital. Let's see what he's looking at now. Mark, what's your trade idea?
Well, first, let's call this a short idea, and it's to be short Tesla.
Okay, so why be short Tesla now?
Well, okay, so 3 big picture reasons why I'm short Tesla, and I've spoken about this before. Number one, they have absolutely no moat, nothing proprietary, meaningfully proprietary of any kind, and actually in each kind of technology that they have, it's been bettered now by other people, either out on the market now or coming out very quickly. Number two, their financials are horrible and getting worse. As time goes on, they lose more and more money, burn more and more cash, and that was all before the arrival of this incredible competition that comes very soon. And on the luxury end, in a few months, Jaguar rolls out a terrific electric small SUV. Later this year, Audi rolls out a larger electric SUV. In the spring, Mercedes rolls out a terrific electric SUV, and then Porsche comes out with a terrific electric sedan next year. On the low end, besides the Bolt, which is out now from Chevy, Kia has one coming out. I'm sorry, Hyundai has one coming out that does 250 miles, and the new Leaf will be up to 200 miles. Anyway, the point is that Tesla put together these horrible financials without the competition. They had this window of sort of opportunity, could not take advantage of it. And now it's just the window's shutting. They have massive debt, cash burn, and massive competition coming. And their $7,500 per car here in the US tax credit is going to go away later this year. Well, all this competition comes in and has it, fresh. So their pricing is going to be way more expensive than the competing cars.
So speaking of promises that Elon Musk has made, what do you see about this thing where they said that they're not going to need to raise money for the rest of the year?
Yeah, so he first said that in, I have a slide that I've done in a presentation. He first said that in 2012. Tesla does not ever need to raise money again. They've since done, 8 capital raises since then. It's total BS about it. And by the way, they phrase it very cutely. It's something like, we don't have to raise money or whatever. Well, yeah, if you completely slash CapEx to nothing, and there goes the growth story, which is the whole thing keeping this bubble afloat, which, by the way, The growth story's over. Last quarter, the one they just reported 2 days ago, when they reported sales, Model S and X sales were down a double-digit percentage, both sequentially and year over year. And these are the only cars that maybe have a little bit of margin to them, you know, to stem the losses. There's no growth story here. The growth is going to be in a company that will lose money. It's nonsense. It's this whole company is a cult of Musk. No one long this stock understands the numbers, even bothers to look at the numbers. They're like, oh, Elon's great, he's going to save everything. If these people actually had a checklist, which actually someone put on Bloomberg the other day, of Elon Musk's promises versus what he did, this guy has, as far as I know, he's never run a profitable business. Never. Even PayPal was gushing money when they fired him from it, you know? He's got a collection of 1970s popular science magazines. And he looks on the cover and says, oh, isn't that neat? You know, a rocket that we could land. I mean, you think Lockheed Martin never thought of that before? I guarantee SpaceX loses money too. Meanwhile, Elon, who is, saving the world with electric cars, is playing with his rockets, flying around in a G650ER, which is the coolest, best private jet.
Okay, I didn't know. My apologies, Sylvia. Let's maybe I'll record this and send it to you guys, or just give you the quick summary. Basically, I didn't listen to the earnings call just because when I listened to Elon Musk, it was so hard to, he wasn't confident, or he didn't sound optimistic about his business. I don't know if he's burned out, but let's just do a quick analysis and then we'll call it a day for the club. So look, right away, gross margin 16. Now, if sales are going down, margins are going to shrink. Let's apply some of the knowledge that we just talked about earlier, right? Keeping things simple. So this is what sales and so we know that the size of it is about 16. So it would look something like this. Sales is kind of like this. Well, not really, it's a little bit higher. And expenses are really high. Something like that. And that'd be the margin, the difference right there. 16%. That's not good. EPS doesn't look good at all. You guys want to hear a little bit of the earnings call? Just to share with you how I felt when I started listening to it. Tesla investor relations.
So could you give me a summary? So sales seems that you still grow. And
so the hedge fund manager talked about the most recent quarter sales. It declined by double digits, so maybe like 10%. Quarterly sales. So what we have right here is the annual sales, right? You got to break it down to 4 quarters. And if sales are going down, and you already have thin margins, and expenses are high, and you're pretty leveraged already.
well,
right?
I was expecting that when they are starting to deliver the Model 3, sales will go further up. Right?
I think that's what he talked about in the video, if I recall. He talked about how the Model 3 sales aren't good. I gotta get back to you on that, or show you this at least.
You mean a further sale, because the pre-sales was quite high, and the money from the pre-sale will actually be computed when they deliver the car, right? Pre-sale, people just pay the front end. I don't know how much.
Yeah.
$1,000, something like that.
Yeah. I don't know, but I just didn't want to listen to the earnings call. I just want to share with you his quick voice of his. And how I just oh my god, this is so. I'd rather watch my own YouTube videos. That's how I felt. Okay, listen for just a little bit. I won't force everyone.
Good day, ladies and gentlemen, and welcome.
As many questions as possible. I think we should really be able to answer. So we're going to go as long as there are good questions to answer. The thing I'm most excited about is the rapid increase in output. We've got, just in the last 24 hours at Gigafactory, we managed to...
Hard to hear, and I mean, I had headphones on at a cafe. It was clear for me, but I couldn't really... I understood a little bit. He talked about how they're very picky on automation, and he admits himself that they spent a little bit too much money on automating something so pointless. about the car, and it's starting to sound kind of bad. At this point, I view him as more of a sales and marketer than actually bringing value. You know, it's like me at Volatility Club. Like, let's say if you didn't see the value, then I'd just be like a sales and marketer. So the takeaway, the hedge fund guy says, if you want, he said that, okay, I wanted you guys to watch the video because he actually talks about how it's hard to stomach these huge moves in Tesla, right? But his takeaway from it is just to buy out of the money puts.
Well, it's not hard to see that Tesla will still go down from the chart. Right?
Yeah. So let's do a monthly analysis real quick. It's already below a major critical price level in my eyes. All right, the next one is 250. But we have a ton of support and resistance right there. But it's looking, I mean, when it was above 300, it looked good to me. But now it's starting to look like too choppy. I don't want to play it. Financials don't look good. Margins don't look good. CEO doesn't sound confident. And I don't know how in line he is with what he says and what he performs. So this looks like a lucrative short, right? It's almost, I still think Spotify is bad too. It's like, look, Tesla is 47 billion in market cap. This one's 27 billion. But I guess, the height or whatever still wants to hold it up. I'm waiting until 150 breaks and then I'll consider playing this again. But for now, it's just...
So at 150, you will say it's
a break at 150.
So further down?
Yeah. I want to see a break at 150. Similar to a Roku, which has been correcting now. But like the Roku, when it broke below... I forgot which price level I played it at.
It's picking up now?
Yeah, it's picking up now, but when it broke down right here at 40, right? 40, you got a nice move down to 30. But then now it's like that pattern didn't play out, right? I thought I was setting up a bear flag and then lower, but it reversed. So you might want to take some, but I would anticipate some resistance at 40.
But do you see it's going up or?
It's still, I think it's still down because it's still below 40. If it's above 40, then I would change my view.
So then it will be like,
yeah,
it's breaking up.
You have to pick a critical major price level and establish your view of the security, right? So for me, I picked 300 for Tesla. If it's below 300, then I'm bearish. If it's below 200, I'm even more bearish. I would even say wait until it goes below 200 to get some puts on that. Because if it can't hold 200, what happened to all this activity right here? Right? All these investors that held it up, they're in the red now. And the financials are showing it. So the hedge fund manager mentioned that it could be dumb money that's holding it up, but smart money's trying to take it down. So
can you look at OIH?
Oh, what?
OIH.
OIH? Hey guys, so this pretty much concludes the discussion today on SoftBank. I don't want to force anyone to stay here too long, but you're welcome to stick around the webinar. If we get kicked out, I'm just going to close out the meeting and we'll catch up again next week. Hope you guys enjoyed today's talk, right? So what'd you say about OIH?
Like another oil player.
Another oil player.
Considering the market right now.
Yeah, you got
as compared to XLE.
So S&P was a nice one. We talked about this one a while back. It moved aggressively, right? But this one is already big. It's like 100 billion. This is an oil player, right? Chinese, PE's low. It rallied pretty well in my opinion, but the recent oil pullback, this is what it did. Look, gap, 3 gaps, that's insane.
But near short term, what do you see as oil?
Near short term for oil?
Crude oil, Brent maybe.
Energy. I'd be a little cautious because 70 didn't hold, right? If you were to trade this, let's say you got in, you bought this breakout at 65 right here, I would get out at 70. Get in at 65, get out at 70. That's how I would have played this because this is a huge down on high relative volume, right? The higher the volume and the longer the candlestick, it's saying something. Like SPY. I use this as an example because if you analyze just the fundamentals of price action, right?
So
you see the size of these candles versus the size of this candle is very important.
So what happened with the crude oil? Why it went down so much?
Because Russia and Saudi Arabia announced they will bump up the production. So to bring it.
Yeah.
So as a supply, I think it will be normal.
At this point, if you want to turn trading into a more consistent cash flow, I found it best when I stick to my models that I know how to trade. And then when I digress from a model, trying new strategies, I got to bet a little bit smaller. So my main model is really momentum model. So when things are running like Boeing, I'll buy I look for a model or not a model, a setup like this.
So
And
would
then
you
when
buy
it gets,
at this point, boy?
at a breakout, yes, I would buy at a breakout, but I prefer like a breakout like right here,
Oh, but 360 is also breakout.
like Netflix right now.
So right now 360 is also breakout for Boeing.
Yes, it looks like it wants to break out, but Netflix breaking out higher right now. This one just wants to skyrocket higher. I know it's been choppy. I know Liz asked me like if you should reduce. It was really hard to tell because the indices, right? But look, it just climbed back up and going higher now. It's like, damn, like you just gotta play this. It's about 151 billion in market cap. It just seems like this is where the world's going. Look at that, that's a clean breakout right there. So I think this one wants to go higher, but it's a little volatile, so you might want to check your share sizing. What else? Nutanix, they had this one might want to cut back. So here's an example of like me playing a breakout and then it working against me. You gotta use these lines with conviction. Right there, right? I thought like, oh, above 65 bullish, and then now below on volume too. So be careful.
With some resistance 48.
Right? The trick is to look for high volume and a high price candle, and then it'll follow through and consolidate like that. Another great example is SIVB. We did this analysis before. It's called the gap earnings analysis, right?
Keeps going up.
Like look, high volume, right, and then follow through. Well, I don't know why it's showing that high volume, but high volume right here, and then follow through right there. Oh, I was going to show you this one real quick. This one's going for a breakout. This one's looking aggressive. So back in like November, I said this one could go to. We were watching this at 35. I said this one could go to. Oh, time to go. I said this one could go to 70. Right? So I still think it can. All right, guys, I gotta head out, but thanks for coming. We'll catch up. There's people coming in. See you guys. Yep. Thank you, Liz, again and again. See you next time.